Yo, what's up, everybody? Welcome back to the channel. We've been talking a lot about stocks and cryptos lately, so I thought we'd do a little change up and give you guys a rundown of some commodities. So, if you're going to be looking at commodities, the first thing you have to keep in mind is that daddy dollar, the US dollar, is one of the most important gauges of how well commodities are going to be doing. 95% of the time, when the dollar is going up, commodities are going to be going down. When the dollar is going down, commodities are going to be going up. So, we usually start our kind of macro look of the market with the dollar and see if that's in a bearish regime or a bullish regime. And how I do that is I look at the relative strength index, and as of Tuesday, yesterday, we hit an oversold level on the RSI. So if we're keeping everything in mind, this is now in a bearish regime. Because we hit oversold. And this top in the dollar was, something that I'd been looking for over these last few months. If we just take a look at the RSI right here and we draw our trend line, you can see, we made an initial peak here in October, and then we made our final peak at the start of November, and there was a huge bearish divergence here in the RSI. So that's really what let us know that this sideways move was kind of suspect, and that the bulls were losing momentum to the upside, and this one was probably going to roll over. And that's what we're seeing. Back in the middle of November, we saw this huge move down, and then we've just been a continued move down ever since. So looking at commodities, always have to look at the dollar first. Next up, we have DBC divided by SPY. This is the commodity index divided by the S&P 500. And this is going to let you know the relative strength of commodities compared to the most important equities chart, which is the S&P. And since the end of October, we have been in a downtrend. And again, if we look at the RSI, just barely staying out of the oversold, but we did have this huge bearish divergence again. We made a peak in September, we made a higher high in October, but RSI did not confirm. In fact, it diverged, and we saw a lower high in the RSI, letting us know that the uptrend was suspect and probably going to reverse. And that's what we saw for the last month. Commodities have been underperforming compared to the equities market, and now we've been in this sideways consolidation pattern, with our glimmer of hope being that we have some bullish divergence now. The RSI has made a higher low, while price has been making equal lows. So maybe we see, a constructive move higher. And if we look at the 10-day SMA, we did have a pretty powerful move above that, although the 10-day SMA is still pointed straight down. So really what you're going to want to see here is, this ratio be able to take out this kind of Darvis box that we're seeing right here, take out this 538 level. And that's kind of going to let you know that maybe commodities do have a chance to outperform compared to the broader market. One of the other ratios that's good to look at is commodities compared to bonds. This has been in pretty much a perpetual bullish regime since May of this year. We saw this huge spike higher. That's when rates were really peaking, and they peaked out in October. And again, we saw bearish divergence here that let us know that this uptrend was suspect. And now we're starting to see the same kind of thing, if you want to draw a trend line right there on price. And then again, same thing. We're seeing equal lows in price, but the RSI is diverging from that. We're seeing higher lows in price. So if we could get a breakout, either above this downtrend line or above this quarter level, that could let you know that commodities are back on to outperformance. And then looking directly at the commodity index, we did see a breakout today, and although we are in a bearish regime right now, we have not hit overbought. We the most recent RSI level was oversold. We are seeing a breakout here, and we are seeing again bullish divergence in the RSI. We made a low in October, and then we made a low in mid-November, but the RSI did not confirm that. In fact, it diverged. We saw a higher low. So maybe, if you want to use this downtrend line, or you can use this gap back in November if you want to wait till it crosses the 2450 level to get in this. We could see a potential for commodities to start ripping again. Next up, I have a basket of commodities, from steel to uranium, gold, silver, copper, all the way down to oil and gasoline. And what I do is I rank these underneath the DVC based on their weekly RSI from highest to lowest. So steel has the highest weekly RSI at 72, and gasoline has the lowest, that's 42. So this is how I kind of measure relative strength within the index itself, and kind of how I look to make sure I'm positioning myself in the strongest assets within that commodity index. So steel, what we're seeing here is a very gappy market. I don't directly trade steel ever. I use steel stocks for that, and we have been seeing steel stocks performing pretty well. Just like the rest of the market, they've been ripping higher since October, and they are pushing up against new 52-week highs. So looking back at steel itself, we just had a contract change over a couple days ago, and we did get this huge move. So we are in an uptrend in steel. This is easily defined by the fact that we had a low and we made a higher low here. Next up, we have uranium. This is one I've been in for some time now, trading the CCJ, that's Cameco, and this one again is in an uptrend, but we could potentially be seeing a retest of this level, which we are right now. Price did not close below that, but we did touch it intraday today, and the RSI is in a bullish regime, but again, we are seeing some divergence. We had this massive move in September. This thing went parabolic. This index, or the Sprout Physical Uranium Trust, went all the way from 11 to 18. That's a pretty massive move in such a short period of time. And now we're seeing that while price is making higher highs, the RSI is not confirming that. So it lets us know that our momentum is possibly waning, and that these uptrends could be suspect. So what I'm kind of looking for here is, if we don't get a quick move off this retest, if we kind of pitter patter this way, look for price to react around the uptrend line. And if we get a break below the uptrend line, that's going to let you know that uranium has officially rolled over, and we could fall all the way to this $17 level. Next up, we have gold. This has been a hard one to trade, and I don't really like trading gold stocks or the actual gold ETF or futures, just because we saw this huge move down in October. We had been in a bullish regime up until then, got this kind of huge move off the March into April area, and then we traded sideways for a while, but never got oversold on the daily. And then finally in October, we got this huge oversold move, and then immediately ripped higher back into overbought, which is kind of hard to get a positive entry as a trend trader, since maybe you could have bought on this October 13th day when we reclaimed these lows, but it wasn't a super high probability trade, and something that it was more a mean reversion back to here. So this one's been difficult to trade, just because we did get this massive rip higher off the lows. You could have bought this pullback here, which I did not. Like I said, I'm not a huge fan of trading gold. It is kind of difficult, but this one's been an outperformer over these last few months. And then silver, same thing. We did finally get overbought on silver, which is nice, and then the contract change today did see a gap higher. So this is something to keep an eye on if these precious metals are going to keep outperforming and keeping these uptrends. you may just want to pay attention and see if there are any stocks or any ETFs or ETNs that you can get involved in to trade these with. Next up, we have copper. This one is kind of better to look at on the weekly chart just because there's more defined levels. And this is really what we're watching here. Made a peak in January and it's been trading down ever since. So if we can get a move higher and finally break above this downtrend line, that's going to let you know that, hey, we're seeing a character change, and it's going to let us know that these more industrial metals are starting to gain favor with investors. And this one is currently in, our bullish regime. We haven't hit an oversold level in some time, not since July of last year. So even though we can't consistently hit overbought, it also is not consistently hitting oversold. So that's just something that you need to note. Not something you really need to take action on, but just something you need to note. Next up, we have lumber. Kind of a newer contract that I've been following here. Again, if you're just looking at the weekly chart, you're going to get a better view and pretty much just sideways action for the foreseeable future, and we're getting a rollover here as well. So maybe we retest this gap that was formed here. Maybe we come back down and test this 522 level. We did not get overbought, which is something to note. So we're still in that oversold bearish regime. And that's a good time when you get these huge rallies to kind of liquidate your position and reduce risk, just because the market is telling you it does not want to push this one higher. And that's evident because it doesn't get overbought. If something is going to get overbought as a trend trader, you need to believe that it's going to consistently get overbought. And if the market is not doing that, it's a clear sign that you're in an underperformer. And if you're in that, you need to sell whenever you get the chance. Next up is natural gas. So kind of like copper, this one has been in a bullish regime for some time. We were in this oversold and kind of grinding higher, grinding sideways, but now this uptrend is suspect just because we have this bearish divergence. We made higher highs here and we made lower highs there. So we're going to see this contract gap has yet to be filled from September. Maybe we trade into that and then we see a move higher. But at the moment, natural gas is kind of looking like an underperformer just because it does have this bearish divergence it needs to work off. And then aluminum, this is kind of a hard one to track. I like to just look at this on the weekly chart just to have a gauge on inflation and have a gauge on kind of your more cyclical commodities. Copper is seen as, a doctor, and then a lot of people like to say aluminum as if you have your master's in economics. So these more producer-based commodities, these more industrial-based commodities let you know exactly what the manufacturing world's like and what the kind of more old world commodity is, building physical things. That's kind of what aluminum's used for. So if this is in a downtrend like we're seeing, it lets you know that there isn't a huge amount of demand at the moment. And that's going to be a good way to kind of gauge what the inflationary pressures are. And then next up, we have the most well-known commodity, oil. I've been watching this one closely just because we have been getting this bullish divergence here. Equal lows on the price, higher lows on the RSI lets you know that, hey, maybe momentum is waning to the downside and the bulls are trying to get something started here. So just kind of taking a look at what these levels are here. If we could get above the 79 level, that could be a good reason to go long, and then maybe look around 90 to start trimming your position. This one has been overbought for some time. Last time we were oversold was in March, and we were able to get overbought back in July, and we have been ever since. So this is in a bullish regime, and like I said, as a trend trader, you have to assume that things are going to continue. And right now, the momentum is with the bulls, so we have to we do assume that this pullback is temporary and we're going to see moves higher. Gasoline, on the other hand, had been in a bullish regime for some time, but it hit bearish over here, and now we're kind of seeing some more sideways action. Again, we have some bullish divergence here. We're seeing higher lows in the RSI while we're getting lower lows in price. Next up, we have DBA. This is agricultural fund. This is known as the softs within the commodities market. This one's been a better performer than your more traditional commodities. Just taking a look at this, a lot less of a downtrend, and it's consistently pushing against its highs here. So this one looks like it's getting ready to break out. Something to watch over these next few days. And the same tracking that I have, I rank these softs based off their weekly RSI. Sugar is a large component of the DBA just because it has been outperforming for so long, but now we're starting to see some more sideways action and potential underperformance in sugar just because of the bearish RSI divergence we're seeing here. Higher highs of price with lower highs in the RSI isn't really a good sign. Soybeans are up next. Most of these softs really haven't been doing great, and especially on the more agricultural side with soybeans, wheat, and corn. This one's really been doing a whole lot of nothing. If you take it to the weekly chart, you just see kind of been trading sideways, not a whole lot of action. See the same thing in wheat, perpetual downtrend. Finally, when you get to the live cattle, though, this is where you start to see a little bit more outperformance. If you've been paying attention, this one went ripping from May of this year up until the middle of September, but then we started to see price making this topping formation with the RSI having this downtrend. So while price was making a higher high here, made an equal high, and then the RSI didn't confirm, and then we're starting to see a rollover. Corn, another kind of underperformer. This one looks a lot like the wheat chart did, and then our lean hogs, kind of same thing. So that's a little bit of a commodities breakdown. If you got any questions, feel free to put them in the chat, and thanks for watching.